Hello traders, Gary Wagner here, approximately 9:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say in Hawaii. It is the 16th day of August, 2013, and this is the daily report for gold and silver, our weekend review. And oh, what a week we have had. Tremendous rise, tremendous rally in the precious metals markets. Silver leading the way. We'll talk about that, and we will spend some time on silver today. First to gold, as you can see, looking at 60-minute charts in straight candlestick format on the right. On the left, we're looking at it in Japanese average format, currently trading up over $10 on the day, 1375.70. As you can see, that's our current print. Our high, though, is 1381. We'll talk about 1380 as a number we spoke about through the week. Low 1357.10. And of course, we did trail our stops up, and we trailed them below 1350. We'll talk about that in detail as we get more into the show. Silver up and away, up over 8%, actually 1.35% higher. High 2353, low 2270. As you can see, current print strongly above $23 at $23.27 and change, and we are getting into the close of the day, but I think we've witnessed as much of the moves as we're going to see this week. On today's show, I would like to recap our current set of trades, our entry level, where our stops are or should be, and also our targets and strategies for exiting this trade. As you know, I believe it was late last week, Thursday or Friday of last week, we actually went in and entered a long position in gold. I believe that was on Thursday of last week, because Friday we entered our silver trade. And really what we were looking at was the fact that the market had just broken out. We're in at 1313 and then started trading sideways for a while, as you can see here. This, of course, is the 11th, 12th start of the week. This is the end of last week on the 8th. And the question that we pondered was whether we should buy the breakout or look to enter on a dip if a dip presents itself. We went ahead and actually just bought the breakout. In hindsight, that was a good call, because we never really saw the market look back. After hitting that point, as you can see, we had this spurt up. This took us well above 1325. Market traded sideways for a while and then went to its next level, this being around 1340. You can see it kind of tracks back to some intraday lows above 1310, 1315, and then we had this tremendous spike, which really began the other day, today being the 16th, this being the 15th, in which we saw the market virtually go from around 1320 and really pop up higher to about 1370. That's where it's currently tracking. As you can see, it is off of the highs. The highs are 81. Critical number, we'll talk about that in a second. But as you can see, it is backed off of those highs. But effectively, we have a market right now that's tracking at around 1370. And of course, we're in at 1313. That makes some sense. Traders, at this point, your stop should be below 1350. That is what we suggested in terms of trailing the stops up just the other day. We are looking at a 480-minute chart, standard candlestick format. We have our current Elliott wave count and sub-fib retracements in there. And this is what I currently am looking for in terms of what I believe the market could do next week. Of course, when we take a look at our current stance, and it's my current belief that in terms of a sub-count, what we had was, here's our low that we started with. This is back on the 28th of June. We get wave 1, wave 2, 3, 4, and 5. All of that is a subcount of this minor 1 right in here. 1 takes us to 2. And then my belief is we are currently in our third wave, which has been composed of course, a subcount. The subcount of the wave that we are in currently, I believe, is something like this. We have 1, 2, we are in 3, we'll get 4, and then we'll get a 5th. And that will compose the conclusion of wave 3, again a subcount. I'll put that into perspective in a second. Now, in terms of our modeling, what we looked at and we talked about throughout the week was that typically wave 1, which is our benchmark, when we compare it to wave 3 in a typical market, you will get an extension anywhere between 1 times 1.38, 138, and 1.61. The key that I've noticed is that typically in gold, the largest impulse wave is wave 5, and 3 tends to be a little bit larger than 1, but not by much. And so the model that we were simply using to forecast where we thought this particular wave 3 would go was basically a 1-to-1 relationship. And so the model that we said is if wave 1 and wave 3 are equal, that should take us to about 1380. Our high today, according to Kitco, 1381. So we've actually hit that on the mark. What we're going to talk about Monday and Tuesday is if in fact we start to see any kind of a weakness in the market. We did a little bit of this the other day, but we're going to look at what kind of retracement we could expect, where that could go. And I think the low that we saw was 38. That would be a 61% retracement. And then we will go into wave 5. So that as long as we continue to trail our stops are now trailed below 1350. If the market continues to move up, we'll continue to trail our stop up higher. If we see it run into some really strong resistance, we might take that to the market, our stop to the market, or we might just simply trail it up much tighter. But what we will be looking at will be determined by how it reacts in this area. Now, traders, to put this in perspective, I've kind of put up two charts side by side. This is that same 480-minute chart. And as you can see, what we're looking at is this spike here. And this spike here simply corresponds to this small move right in here. And when I talk about waves and the count, first of all, an intermediate count, this is our last intermediate one, as you can see right here, begins at around 700, takes you, if I am correct, to around 1250 right here, and then it begins to correct and retrace. That is an impulse 1. Here is 2, 3, 4, and 5. So what we're looking at when I talk about wave 1 as an intermediate wave is it's going to be composed of a subcount, as you see in here, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. It actually has a double count. And what I'm looking at in terms of this smaller chart is that subcount found within the intermediate count, 1, 2, 3, 4, 5, A, B, C, and I believe we'll get another 1, 2, 3, 4, 5. I've typically noticed in gold you'll get a double count in between each intermediate wave. It's odd, but it seems to bear fruit in terms of its forecasting ability. So when I speak about an intermediate wave, this is what I'm looking at. And these intermediate waves, as you can see right here, can take the better part of a half a year or more. And what we're looking at right now is the onset, or the beginning, I believe, of that impulse phase here. This entire move up, when we consider our major count, and this 5 concluded our intermediate count, that was our wave 3 in terms of our major. This is our wave 4 right in here. And of course, my belief is we have just entered wave 5. Now, we also need to be cognizant of the fact that we broke through a key level of resistance that to me was absolutely critical. And the level that I'm talking about is when we look at, again, this is our intermediate count. We've got 1, 2, 3, 4. And when you look at the low of 4 and we draw it across, let me try to get that as straight as I can. We have an area which is supportive right in here, obviously. As the market comes down, you can see that it attempted to find support, but that support was quickly breached as it broke through and made these lows at 1181. But you can also see right in here that it had a little bit of resistance. It took 2 times, but significantly broke through, and that is our breakout right there. And to me, that's absolutely significant. As long as we're holding above that point, I think that this market is headed higher. But most importantly, it gave us some technical evidence that we, in fact, have weathered this long correction from 1900 plus down to just below just below $1,200 per ounce. And traders, as far as silver goes, incredible breakout week, just incredible breakout week. When we consider that this is a weekly candlestick chart, and what we're looking at in terms of a single week right in here is absolutely significant. We saw this market gain such a tremendous percentage when we consider that it has moved roughly, $3 this week alone, incredible move to the upside when you consider that we've seen this kind of a rise in silver. Now, where are we looking for it to go? Where do we expect it to find support and resistance? Of course, we bought in at 2045. And the key, as we talked about yesterday, was I really needed to see it break above this point, because up until then I was extremely bearish in this market, because as you can see, it really meandered right in this area. And as gold moved up, silver really lagged behind. But that all changed this week, as you can see, this clear and utter breakout. And in terms of significant resistance, 24.93, that's the real next level, just below $25. That's the target that I currently have for silver. I think that we could see it get as high as the mid $24 if we see gold continue to rally. I believe it's going to follow in suit with gold. This has been Gary Wagner, wishing you, as always, good trading. We absolutely got that this week. We'll talk to you on Monday for another daily update and review. Bye-bye.